Hello and welcome back. And so we're going to now look at this section on bank reconciliations. Okay, and first of all, just thinking, well, why? Okay, what is the actual need for a bank reconciliation in the first place? Okay, well, if you think about it, why do businesses fail? Okay, if we ask that question, why do businesses fail? Okay, and the answer is they run out of money. Ultimately, it's not about whether they're profitable or loss making. It's the fact of do they have enough money in their bank account to be able to keep operating and to keep running. Okay, and so realistically, it is that bank account. There's that central pool of funds that a business has. I know some people deal in cash, but they're still going to bank it in their bank account. So really, it's how much money is going into and out of that account that's absolutely critical. Okay, and so therefore, if we know that that is so essential, keeping a track of what's gone into and out of our bank account is going to be absolutely critical to make sure that everything we're expecting to go in there has, okay, everything that we're expecting to go out has, and there's nothing funny or anything like that going on. Now, the idea with a reconciliation then, okay, is a reconciliation is where you're basically going to get two numbers from two separate places and you're going to agree them to one another, okay? And that's the idea of reconciling something, okay? So if we think about our bank account or a business's bank account, who's going to record down what goes through that bank account? Well, first of all, I am. Yeah, as that business, I'm going to record that down. Now, that ultimately are all the entries that are going through our cash book. As we enter into transactions that would affect the bank account, we should be recording that down in our cash book, okay? So the first place I would expect to be able to find details of what's gone in and out of the bank account is by looking at our cash books, okay? Yeah, we should have that information internally of everything we're receiving and everything paying. Now, of course, the other person or the other entity that is going to record down everything that's gone in and out of the bank account is the bank itself, okay? And there I'm going to find out about that because I'm looking at my bank statement, okay? So the idea is if I'm recording down everything that's gone in and out of my bank account, and the bank has recorded down everything that's gone in and out of the bank account, we should be able to compare how much money I think I've got in my account to how much money the bank statement says I've got in my account, and those two numbers should be the same, right? In theory, they should be the same. However, as you can appreciate, I'm sure you can appreciate, they may not be, okay? And certainly if you're doing an exam style task, they probably won't be, okay? So if we just then start to think, well, why is that? Why might it be, okay, the figure that I think I've got in my bank account is not the same number as what appears on the bank statement, okay? And what we end up having to really think about is I suppose, almost categorizing things in a couple of ways, okay? So in terms of this, why might they be different? Okay, well, it's often a mistake or error or a timing difference, okay? Now, it's the sort of thing, it may be, therefore, that we've done something wrong, okay? And that's what I'm really interested in here, is making sure that my cash book is right and I haven't missed anything or done anything wrong. So sometimes the reason the figures don't agree is because there's a mistake or a problem, okay? Fine. Fine, we may need to correct that. And sometimes it's just purely a timing difference between when I've recognised something versus when they have. Okay? 4. So, things that can happen and why things might be wrong. Okay? So, we're looking here at items that may be on the bank statement but are not within our cash book. So why is it that things appear on the bank statement and we simply do not have them at all? Okay, well, first of all, it might be the bank's made an error. Okay, it doesn't happen that often, and every time I've ever seen a bank error in real life, I mean, I have seen them, the bank has basically immediately corrected it, and it's kind of been like there's been a line on a bank account either with money going in or out, and literally like the next line or a couple of lines down it will say, oh, reversing that, bank's made an error, we've not charged you for this transaction. Okay, so I don't think I've ever seen an unresolved bank error. And it does happen rarely, but in theory, the bank could make a mistake and could put money in or out of an account when they shouldn't have done. Okay, so fine, it could be their problem. It may well be things whereby there's stuff that's gone through the bank and we simply haven't recorded them. Now, the most common things are stuff like standing orders and direct debits. Why? Because they just tend to happen. You set up a standing order, you don't get notification every single time that standing order goes out. You set up the paperwork at the beginning and then it just lasts until you tell it to stop. Again, a direct debit, once you set up a direct debit with somebody, they don't tell you each month necessarily they're about to take more money out of your account. So standing orders and direct debits can often get missed because you're not actually dealing with a bit of paperwork at the time the transaction happens. Okay? Bank charges and bank interest. Well, look, often the first time you find out what your bank charges are when they send you the bank statement, okay? And that's where you pick it up from. Same with interest. It's normally the receipt of the bank statement that lets you know what the bank interest or bank charges actually are. So again, rarely will they have been recorded down because you actually need to see the statement to find out what those things are. Okay, so we do have those that are quite often missed where, again, they're on the bank statement, but they're not in our own books. It may be, again, just something we've overlooked on our part. Okay, so where there has been a bank receipt, so a customer has paid us and we didn't know they've paid us, maybe they've not informed us, okay, we haven't had a remittance advice or something, so it suddenly just appeared in the bank account, okay, and there was nothing else for us to go on. If a customer sends us a check, we'll record down as having had the money when we open the post and get that check. If they've just paid us directly into our bank account with no remittance advice, I won't necessarily know it's there, okay, in terms of that bit. Okay, and then final thing, okay, here in terms of where there are things on the bank statement we've not recorded down is this idea of a bounced check, okay? And if we think what we said about checks previously in this section or in this chapter, we said, look, the point about when someone writes out a check is it's not at that stage a guarantee that any money will transfer, okay? And so there is always that danger that somebody writes out a check, gives me a check for say £1,000. I think I've had the money, so I'll record down the fact I've received £1,000. But when I go to pay it into the bank, actually what happens is that the bank statement throws up the fact that the check didn't clear, okay, and the other party didn't have those funds in. So I suddenly realise that maybe that money's not gone in there, okay, and so it's sometimes known as a bounce check, sometimes it's known as a dishonoured check, okay? And so again, it's something that will have happened on the bank statement where they'll go, right, almost show the money going in and then straight back out again because the check's not cleared, okay, and I wouldn't know about that. Okay, so they're the sort of things that can easily happen where, something's occurred on the bank statement and you didn't know about it. So the point is you're going to need to, well, unless it's that error, okay, you don't record down errors the bank have made. The rest of it is like, yeah, we're going to need to go and change our records for this sort of stuff, okay, because all these bits down here, we need to go and amend our cash book for them, okay? Because this is stuff that really has happened, okay, that we didn't know about. Now we need to go and actually do a double entry and record that down. Obviously, if the bank's made an error, don't record their error down in your accounts, okay? Now, what we then get is a list of items, okay, that are in the cash book but are not on the bank statement, okay? Now, it's the sort of thing, it might be that we've accidentally done something twice, okay? So, if we've recorded down a transaction twice, okay, and recorded down a receipt or a payment twice, well, look, there isn't really two payments or two receipts there, okay? So, again, that is an error in the cash book that we would need to amend, okay? That's us making a mistake, okay? The next couple, which are far more common, these are timing differences. And importantly, these things I am not going to adjust my cash book for, okay? I haven't done anything wrong, okay? So it may well be, particularly if people still pay via cheque, okay? You know, if I'm let's just say I'm looking at a December year end, so I happen to go into the office between Christmas and New Year, and so there we are, 31st of December, and I open the post and I've got a cheque from £10,000 from one of my customers. I'm going to sit there on the system and record down that that customer has paid me. Okay, now the thing is, I may not actually get to the bank that day, so it may be the 3rd or 4th of January before I actually go to the bank and take that cheque with me. It then might be a few days before that cheque clears. So the point is, I recorded down in my accounts in the cash book on the 31st of December, oh look, customer A paid me £10,000, but actually the bank statement won't pick that up until maybe the 6th or 7th of January, okay? So we don't need to change our cash book. It's not that we did anything wrong at the end of December, it was just there was a pure timing difference between when we knew we'd got the money versus when the bank was able to do it, okay? So those outstanding receipts referred to as outstanding lodgements, okay? Now, very similar to that, but in reverse, okay, instead of it being a cheque from a customer, what if we write out a cheque to a supplier? Again, much the same thing. If I'm in the office on the 31st of December and I write out a load of cheques to suppliers, okay, I'm going to do the double entry for that and show that that money has come out of my bank account. But realistically, what I'm going to do is I'm going to pop that cheque in the post. My supplier won't actually receive that cheque until early January, then they need to go and take it to their bank and for the cheque to clear. So again, I know that the cheque was written and money was going out of my account basically on the 31st of December. The bank doesn't actually know and won't record the money going out until, say, the 6th or 7th of January, okay? So again, it's just a timing difference between when I do it and when they do it. Okay, so again, that's known as an unpresented cheque. So with timing differences like that, it's not that we've done anything wrong, okay? It's not that our accounts or our cash book are wrong. We're happy with those things, okay? So we don't go and adjust our own books and records, okay? We can simply have that as a reconciling item. Hello and welcome back to these lectures on bank reconciliations. Okay, so what we're now moving into is how we actually go about performing a bank reconciliation. Okay, now the idea here is it's supposed to be quite a practical task. It's quite a practical task in the assessment, and the reason for that is it's a practical task that is done in real life. Okay, so companies will do bank recs all the time, literally, daily in most cases. Now it's the sort of thing that these days it's all done electronically, typically. Okay, so most businesses these days using computerized accounting packages. They'll all do it sort of digital, so to speak. We're kind of looking at how you would do it, kind of sort of manually, and again, a little bit of sort of what the computer's doing in the background. Okay, so what do we do? Well, first of all, okay. At step one, okay, we need to basically go and check any opening balances. Okay, so at the bottom here, you have the section, you've got the summary of what we're doing. We check the opening balances. Idea is, remember, with a bank rec, is that we are basically going to compare all the transactions we've recorded in the cash book, okay, and we're going to compare those to what is on the bank statement. Okay, now the point is that is only going to work if we agree that at the start of the period we're in the same point. Okay, there's no point trying to say are we in the same position at the end of the period if we weren't right at the beginning. So we need to make sure at the start of the period we agree we're in the same position, and then we can do all the work during that period. Okay, so step one, make sure the opening balances agree, and just make sure, okay, therefore, that the opening balance on the bank statement does agree to the opening balance on the cash book. If it doesn't, okay, then you need to fix that straight away. In the assessment, it almost certainly will. Okay, I mean, check it, make sure. Okay, but it almost certainly will. Okay, they tend to make sure it does in the assessment. They tend not to try and catch you out that way, but you never know. Okay, you never know. They do obviously update assessments and change them, so they could chuck it in. Now, for most businesses, then, what you're going to have to do is we're going to need to agree, do all the receipts that we think have come into the bank, have they actually gone through the bank? Okay, and all the payments that we've made, okay, and we think we've made, have they all gone through the bank? Now, for the majority of businesses, okay, in terms of the number of transactions, okay, there are normally more payments, okay, and more things you need to pay for than there are receipts, okay? And so, when you make a sale, the value of your sale, okay, will be enough to cover all the payments you've had to make, and indeed a bit more. It's how you make a profit. So for the majority of businesses, okay, if you just look at the number of transactions, there are more purchasing transactions, so that's purchases or insurance or rent rates or labour costs or whatever it might be, they're normally more than the receipts. So we therefore start with the receipt side and basically just check all the receipts in the cash book do actually appear on the bank statement. Okay, so I just want to make sure everything that I think is coming in, okay, does actually clear the bank. Now, there may be some things that do not, and this is where we identify our outstanding lodgements, okay? Our outstanding lodgements, okay? So remember, these things are literally just the idea where we have a receipt in the cash book, but it is not yet on the bank statement, okay? Yep, so remember that, okay? That is what we're looking at with an outstanding lodgement. Okay, and so the whole point is that we know we've had the money. So let's say I've come into my business, one morning, I've opened up the post, one of my customers has sent me a check. Lovely, I know they've paid me some money. I'll bang that in my cash book as a receipt. The problem is I've got to take the check to the bank, wait a few days for it to clear. Okay, so there's going to be this timing difference between when I know I've had the money because I've seen the check and I've recorded it down versus when the bank knows they've had the money, which will be a few days later, okay, and they record it down. So we identify our outstanding lodgements. Now at step 2, we're going to do something very, very, very similar, okay? Only this time we're going to do it on the payment side instead. Okay, so again, we're going to check all the payments we've recorded down in the cash book and check that to what's on the bank statement. Now, what I'm looking for this time then are these unpresented checks. Okay, yes, these unpresented checks. Now, remember, these are where we are showing a payment in the cash book, but that's not yet shown on the bank statement. Okay. So similar idea, that same morning I came in to work and I sat there and opened all the post and found I'd had some checks from my customers. I might immediately afterwards have got out my checkbook and started to write out a load of checks to my suppliers for the things I need to pay for. So again, I will now have recorded down in the cash book that I've made all these payments to my suppliers. Problem is, I need to pop that check in the post. My supplier needs to get it, take it to their bank. So again, it's going to be a few days later before the money actually leaves my account. So we end up with this timing difference yet again of I know I've written out a check and therefore money is going out the account, but it won't appear on a bank statement until a few days later. So again, it's a timing difference. Okay, now unpresented checks and outstanding lodgements. Okay, so these unpresented checks here and these outstanding lodgements are reconciling items. Okay, so the unpresented checks and the outstanding lodgements are reconciling items. Okay, now the whole point about that and what I mean about that, okay, is the fact that when you do this, okay, we haven't done anything wrong. It is purely a timing difference between when I know money is leaving the account or coming into the account versus when the bank knows that, okay? And there is just a bit of a timing difference between those two things in that I know I've received a check from a customer or paid a check out to a supplier. The bank doesn't know that until a few days later. It is not that our accounts are incorrect. They're not incorrect, okay? It is purely a timing thing, okay? So we don't need to go and start changing our cash book or changing our books and records for outstanding lodgements and unpresented checks, okay? We don't need to do that. Okay, so yeah, don't do that. Now, when we get to then step 3, what we're going to do here, okay, is we now need to go and actually have a look. Are there any items on the bank statement that do not appear in the cash book? Okay, now it's the sort of thing. It's possible, okay, that there might be some sort of mistake. There may be things we've missed, okay, and the classic things you miss are maybe if it's things like standing orders or direct debits where there won't necessarily have been an invoice that's come with it because you've just set something up on a standing order or direct debit. So you had, you maybe get one invoice a year, say for your insurance, but then you pay it every single month, okay? So it's the sort of thing that can easily be forgotten on a particular month. Now, the point here is that, look, if there are things that are appearing on the bank statement, okay, that are not in the cash book, you need to update the cash book, okay? So this is where we do, with these items, we do need to correct the cash book, okay? Yep. Outstanding lodgements, unpresented checks, no cash book entry required for that. Okay, yeah, that's not that we've done anything wrong. It's purely a timing difference. These items here at step 3, the things that we know have happened and have gone through the bank. So, standing orders of direct debits that maybe we've paid, okay, or something like that, has genuinely happened. It's a real transaction. We need to record that transaction down, okay, and we haven't. Okay, so this we need to go and update our books and records for and complete the cash book and correct the cash book, okay? Now, once we've identified all of that stuff, okay, ultimately at step 4, and what we're trying to do here is basically complete the reconciliation, okay? And so this is where we're going to look at that difference between what does the bank statement show, what does our cash book show, okay, because they will have a different balance on them at the end of the period, okay, but then we're just going to prove to ourselves that the only reason they are different, okay, is because of outstanding lodgements and unpresented checks, okay? So basically, all we're doing here is prove that the difference between the cash book and the bank statement is down to timing differences. Okay, so what we're doing then at this reconciliation is saying, look, okay, fair enough, at the end of the period, the balance per my cash book and the balance per that bank statement are not the same number, but it's not a problem. It's not that anything's gone wrong. It's just literally a bit of a timing difference between when I know stuff's happened and actually the bank doesn't know about it till a few days later, okay? But the point is we've gone and corrected any errors, okay, any mistakes at step 3, so we know that our cash book is correct. The only reason it now doesn't match the bank statement is just a timing thing, okay? So it's not that anything's wrong. It's purely a timing thing. That's what we're trying to do with a bank rec. Hello and welcome back to the bank reconciliations, and let's have a look now at this illustration. So this is a bit of a walkthrough of what would be a practical task and could be a very practical task in your assessment. So let's have a look at what we've got here. Well, first of all, we've got this statement of account look from Central Bank. Okay, so very clearly then, this is our bank statement, okay, and so we'll come and have a look at a bit more detail on this in a second, okay, but they've given us a bank statement here and sort of details on it we'd expect. They then give us, look, Formula Limited's cash book. Okay, so here is our cash book here, which is kind of effectively split. So we're going to have receipts and payments. And again, we'll mark all this up in a minute. So we're given a cash book. And then what do we got? We're then told things we need to do. So we need to check the items on the bank statement against the items in the cash book. We need to update the cash book as required. We need to total the cash book and show clearly the balance that's being carried down on the 23rd of June and therefore brought down on the 24th of June. And we need to complete the bank reconciliation statement at the 23rd of June. Okay, and we do give us a pro forma here for the bank statement, in that we're going to start up here, look, with this balance per the bank statement, okay, and we're going to end up down here at a balance per the cash book, okay. Now, as we said, those two numbers may not necessarily be the same, and certainly if you're doing this as an assessment task, it will not be the same, okay, and the whole point is that, right, we need to basically show and demonstrate and prove that the only reason those two numbers are different is because of the timing differences, okay. So to our bank statement, we're going to add on any of those outstanding lodgements, okay, i.e. any receipts we know we've had that haven't yet gone through the bank, okay, and we're going to knock off any of the unpresented checks, i.e. any payments we know we've made that, again, have not cleared the bank. And by the time we've just adjusted for those timing differences, actually the balance per the bank and the cash book is the same. That's what I'm trying to ultimately prove here. So let's come back and start looking at the information we do actually have. Okay, so as I said, we've got this bank statement. Okay, so fine, give us a little details, we're the customer and everything, and this bit. Now, really important to realise here, okay, and you might not like this bit, but this debit column, cash out, this credit column, cash in. Why? Banks do debits and credits the wrong way round. Okay? They don't do it the wrong way round. It's just that they do it from their perspective. Okay, yeah, so they do it from their perspective, okay, and their perspective is the opposite of me, okay, and so the problem is in our own books when we put money into that bank account, we show that as a debit, okay. From the bank's perspective, that's actually the other way round, okay? Because when you're, so we're sitting there with a big debit balance on our account, i.e. we have money in the account, that money belongs to us. It is an asset of ours. That cash, okay, it's something we own. We own that money. Flip that round from the bank's perspective. If you've got money in your bank account, that doesn't really belong to the bank. It belongs to you. So as far as the bank is concerned, you're actually their creditor. Okay, they have to give you that money back. If you if you walk into the bank today and say, I want all that money out of my bank account, please, and obviously you have to show your ID and prove that it's you, the bank has to give you your money. That's the point. It's your money. Okay, so from the bank's point of view, when you're sitting there with money in your account, they owe that money to you. So from the bank's perspective, you are their creditor. So they show it as a credit on their bank statement. Equally, if we look at a bank overdraft, okay, for me, if I've got a bank overdraft, I will show that as a credit in my books, okay, because it's a liability, because I owe that money back to the bank, okay, because it's an overdraft. But from the bank's perspective, then that is something they own. They own that debt, okay? Yeah, that is an asset to them because you now owe the bank money. That's a receivable to them, okay? So they show it as a debit. So just watch out because bank statements are always the opposite way round to what we are doing, okay? So you can see here, look, this debit column, it has got as we're paying out checks, okay? Yeah, so, that is a payment. As is that is a payment, and they appear, okay, in the debit columns there, okay. You can see when we're paying money in, okay, so when we're paying money in from this bank Jaro credit, so one of our customers has paid us money, that goes into, so this is a receipt, okay, and that's going into the credit column there, look. Okay, yeah, and so at the start of the period, we've got £10,000 in the bank. As we make that payment, the bank balance goes down to 8,000. As we get that receipt, the bank balance goes up to 8,500. Okay, so just be really, really, really careful about that. Okay, everybody hates it when they first see it, but it's just the fact that bank statements are the wrong way round, or because they're doing it from the bank's perspective. So debits and credits on a bank statement are the opposite way round to how we normally do them. Okay, and how we do them in our own cash book. Okay, but that's what we've got there on our bank statement. Now look, in our cash book, okay, so here we've actually got our receipts. Okay, so this is our cash in as we think. Okay, and over this side, remember, then this is our payments. Okay, and so this is our cash out. Okay, so we've got our receipts, okay, our cash in, we've got our payments, our cash out. Okay, so we have our receipts and payments there, so that's our cash book split between the two things. Okay, so we've got that information. What I now need to start doing is pulling all of this together, okay, and start having a look at how this works. Now remember, step one was to check the opening balances. Okay, well look, the opening balance on the bank statement is £10,000. Okay, it shows there is £10,000 in that bank account there. Okay, and the balance brought down on the cash book is £10,000. Okay, so for the first part of step one, check my opening balances. Tick. Okay, yeah, happy with that. Absolutely, that works. Okay, so step two, okay, or sorry, not step two, the second part of step one, I should say, okay, is check the receipts in the cash book against the receipts on the bank statement. Okay, so first of all, here we've got 11th June, Hamilton Limited gives us £500. So the whole point is, can I find that on my bank statement? Well, look, it clears. Slightly different date, as we'd expect. We know we had the money coming in on the 11th. Doesn't clear the bank until, say, the 12th. But there's the credit from Hamilton of £500. So those items have been ticked off, so to speak. Okay. Next, we've got 20th of June, Vettel Limited, £2,300. Well, again, on the bank statement there, 23rd of June, paid into the bank, £2,300. Okay, so I'm happy with that and that Vettel Limited in terms of something that's come in. Now the last receipt I've got is on the 22nd of June from Alonso Limited of £1,400. Thing is, if I now look at the bank statement, there isn't anything on the bank statement. Okay, so this is our outstanding lodgement, okay, in that we know we've had £1,400 from Alonso. It's not yet gone through the bank, okay, and so what we've ended up with is this outstanding lodgement. Okay, so that's step one done. Check our opening balance, agrees, okay, and then effectively tick off, okay, our receipts, okay, to what's gone through the bank statement. So step two on our procedures is to do very similar thing, but now check the payments in the cash book against the payments on the bank statement. Okay, so first of all, right, I've got this 4th of June, check 450 to Pros Limited of £2,000. Can I find that on my bank statement? Okay, well, yes, I can. There's the check of £2,000. Okay, great. Next, can I find check 451 of £400 to Weber Limited? Well, let's have a little look. And the answer is yes, I can. Look, there is check 451, £400 to Weber Limited. So, looking at my cash book again, and can I find on the 9th of June check 452 to Raikkonen Limited of £1,500? Well, again, looking at the bank statement, yes, I can. I can find that. I then have, next thing on my cash book on the 18th of June. Check 453 to Rosberg Limited of £450. Okay, now can I find that? No, I can't. Okay, so I can't see that anywhere. So, okay, fine. I won't tick that off. I won't highlight that one. And then finally, can I find on the 20th of June the direct debit to the landlord for rent of £3,000? And the answer is yes, I can. There it is. There's the £3,000. Okay. So what's that told me? Okay, well, what it's told me here is that, look, I'm happy that 4 of the 5 things there do clear the bank. The one that doesn't is this £450 here from Rosberg. So this is my unpresented check. Okay, I know I've written out this check, okay, and sent it to Rosberg. For whatever reason, they just haven't banked it, okay, yet, or if they have put it in the bank, it's not yet cleared the bank. So maybe it's taken a few days to post it to Rosberg. Maybe they only do their banking once a week, let's say. So they've actually sat on it for a few days. So it's just taking a little bit of time before it actually clears the bank. So that's my unpresented check, okay? So that's step 2, and check off the payments. Step 3 is then to start looking at the actual bank statement, okay, and think, right, what's on there that's not gone through the cash book? So I've got on here now this direct debit for insurance for Button. I've got these bank charges, okay, and I've got this backs payment for Massa, okay. Now these 3 things, okay, so that transaction, that transaction, that transaction, this I will need to correct the cash book for, okay, because the whole point is that they're real transactions, okay. There are 3 genuine transactions there that have gone through the bank, okay. We have paid for some insurance on a direct debit. We have paid out some bank charges, okay, legitimate transactions sitting on my bank statement. We have received £800 from a customer in Massa. Now, because it's a backs payment, look, okay, maybe we didn't know about it. If they've not told us, if we haven't had a remittance advice, we may not have had any notification from Massa they've paid us. It's not like I've had a check in the post which I've opened and seen. So they are 3 things that it wouldn't be a surprise that you didn't know about until the bank statement. Direct debit, yeah, dead easy to miss that one, okay. Bank charges, probably the first time you know about it is when they appear on this statement, okay. And then this receipt that, yeah, it's a backs payment. Maybe Massa's not told us that they've paid us, okay, and so I haven't known about it until I've seen this bank statement, okay. So that's step 3, is identify what is actually there in terms of sitting here on this bank statement that we've yet to pick up. Okay, now having done that task, or done those tasks now, that actually puts us in a position to actually go and complete the reconciliation, which is what we'll go and do in the next bit. Hello and welcome back to this illustration on bank reconciliations, okay? Now, over the next few pages of some of this wordy stuff, okay, I'm not going to spend ages on this because actually we've just really been through a lot of it in the previous lecture, okay, and the previous one here, okay, because it just kind of very much talks us through what we were doing when we've just gone and marked up and highlighted our bank statement and already our cash book, okay. So it talks about the fact of make sure we've cross-checked the opening balance, which we have, okay. It talks about making sure we understand where the payments and receipts columns, okay, are, and what the bank statement itself shows. Okay, so we've seen what the bank statement shows, again, in the previous lecture. It then talks us through the cash book, okay, and the way the cash book is laid out in terms of the receipts and payments columns, which again we've seen, and the bank reconciliation statement, which we're going to go and fill in. Okay, so all of that we've spoken about in the previous lecture. So in terms of the process, okay, we already had agreed the opening balances, and then when we went and looked at our receipts, you may remember the one receipt, okay, that we were left with was there was a £1,400 received from Alonso, which was not on the bank statement, and we labelled that, okay, as being our outstanding lodgement, okay, our outstanding lodgement. Now, we said that was a timing issue, okay, and so because it was a timing difference and it was our outstanding lodgement, it belongs on our reconciliation statement, okay. So here we are in our reconciliation statement. Under our outstanding lodgements section, we now include Alonso Limited and that £1,400, okay. So remember, that was not an error, that was not a mistake. That was not something that we have done or recorded incorrectly in our books. It is simply the fact that we know we've had the money off Alonso, but it just takes a few days to clear going into the bank, so it's not yet appeared on the bank statement, but it will do in a couple of days' time. Okay, so that was what we identified in our first step, and we found that part about Alonso. Now, the second thing we did was when we went through all the payments in the cash book, okay, so the payments to the cash book, we ticked off the list, okay, and the one thing we were left with, remember, was check 453, okay, to £450 to Rosberg Limited, which we couldn't find on the bank statement. So we said, again, that was a timing difference, and that was an unpresented check. It was a check we've written, so we know we are going to be spending the money and it's going to go out to Rosberg Limited. It's just that it's not gone through the bank statement yet. Again, a timing difference, so that forms part of our reconciliation statement as well. Okay, so coming back to that reconciliation statement, or adding to it now, under our unpresented checks part, we've got an unpresented check of £450 there, which went to Rosberg Limited. Okay, so again, not something we have done wrong. Okay, it was not something we'd done wrong. Okay, it was purely, again, a timing difference between when we know we're paying for something and the fact the bank doesn't pick up that transaction until a few days later. So what we then had was step 3. And at step 3, remember, we were looking for items that were on the bank statement but did not appear within our cash book. Okay, so that's what we were looking at, were the items that do not appear within our cash book. Okay, and what we found is that there were 2 payments. There was a direct debit of £350, which actually that direct debit was for insurance, wasn't it? There's a direct debit of £350, and there were bank charges of £70, okay, which were on the bank statement, so we have paid them, but they weren't in the cash book. And there was then one receipt, okay, there was a receipt of £800 from a customer called Massa, which again, it had come in as a backs payment, okay, so we know we've had the money, but again, it was not in the cash book, okay. So remember, these items we do need to correct the cash book for, okay, because they've legitimately taken place. You know, they've either come into the bank or been paid out of the bank, so they're real transactions. They have happened, okay, but we haven't reflected that in our own books and records yet, which we need to go and do, okay. So we have to update the cash book for these things, because this is us genuinely having missed transactions out, okay. So remember, we've got our receipts side over. Draw a split here, so remember this was our receipt side, okay, and so there we go. We need to add in that additional receipt of £800 from Massa Limited, okay, because that money has genuinely come into our account. On the payment side, there were 2 transactions, okay, so we had the direct debit to Button Insurance of £350, and on 23rd there were the bank charges of £70, okay, so remember those 2 amounts had left our account, okay, so therefore we need to include those transactions, okay, in our cash book, okay, yeah, they should have gone in there, they were missing, okay. So ultimately what this now allows me to do is actually roll forward and look at step 4. So now what we're going to do to finish off the example is we need to balance off our updated cash book. We have had to change it. There was a receipt and there were 2 payments which we missed. And so the fact we missed them means they now need to be changed. It now needs to be updated. Okay, so we've got to change our cash book. And having done that, we can then start to do the reconciliation statement. Okay, so first of all, balancing off the cash book. Well, this is just a case of which side is higher. Okay, so in the normal way, so it's like, right, well, actually, the debit side is greater. It's 15,000. So we'll put that in. What figure do we need then to make the credit side balance and add up to £15,000? Well, okay, on the 23rd of June, we need to put in our balance carried down, in this case of 7230. Okay, so that's £7,230 there. That's what we need to balance it off. And so therefore the balance brought down, okay, which will be the 7230. Okay, so that's balancing off the cash book. Now, in terms of then what does this mean for the reconciliation statement? Well, we now know that that final figure of 7230 is the balance per the cash book. Okay, so we can put in that 7230. Okay. Now, turning back and looking at the actual bank statement itself. Okay, so coming back to the bank statement itself, and we'll just whip back to it quickly. While we get there, so we just come back and look at that final bank statement. What was the final number on our bank statement? Well, the final figure we were given, remember, under the account balance column, the final number we had was 6280. Okay, yeah, so 6280 was the balance on the bank statement. Okay, so that we now need to go back to our reconciliation statement. So again, just bear with me while I just scroll back to where we were. On our reconciliation statement, we can now go, look, here's the balance per the bank statement of 6280. Okay, so we've corrected our cash book, okay, to 7230. Okay, and we then need to go, right, there's the balance for the statement. Now, as it says here, okay, we add on any outstanding lodgements. Okay, so remember there was £1,400 from Alonso, which we know is coming into our bank account. Okay, the bank just hasn't picked it up yet. Okay, so effectively we're going to add on that £1,400. We are then going to take off. Okay, so remember this is our outstanding lodgements, so I should just make a note of that. We are then going to take off our unpresented checks. Okay, so remember, any checks that we have written out, we know we've written this check out, we know the money will be leaving our account, it's just that it hasn't done yet. Okay, and we then had this amount from Rosberg Limited, so we're effectively going to subtract £450. Okay, the real key test is, does 6,280 plus 1,400 minus £450, does that come to 7,230? Unfortunately, the answer is yes, it does. Okay, so this has now reconciled the bank. Okay, so at the end of all of this, the balance on my cash book will be 7230. That's the figure I will report in my accounts. The balance on the bank statement is only 6280, so right, they are not the same number. But the question is, am I okay with that? And the answer is yes, I am. Okay, I know why they're not the same number, and it is purely down to a couple of timing differences. Nobody's done anything wrong. It's just the fact that I know that money is coming in, okay, and that money's going out because I've had notification of it before the end of the period. It's just that it won't actually show on the bank statement, okay, until a couple of days later. Yeah, and that's what happens. It's much the same way that, you know, you might have it if you go out today to a shop and pay for something on your debit card or your credit card. It may not immediately show, particularly with a credit card. It may not actually show as a transaction today, but you know you've spent the money. It's just that it takes a day or two to appear on your statement, and that's exactly what's happening here. Okay, we know we've received 1,400, will receive 1,400 from Alonso. We know we will pay 450 to Rosberg. Okay, so that's the only difference that's left, and that's the whole point about your bank reconciliation.